Notes and mortgages. What are notes? Well, as sub 2 investors, a lot of us know a little bit about mortgages, a little bit about notes and how they work. But it turns out there's a whole lot more to them than even what most of us know. So that's what we're going to talk about today on the Sub2Deals Show. Hey, Sub2ers. Welcome to the Sub2Deals Show, where we talk about all things subject to. Now, occasionally, we will get into other real estate investing topics, but it's always something to help you with your real estate investing business. If you're new here, we welcome you to the show and ask that you subscribe to us, our YouTube channel, sub2deals.com/YouTube. We release a ton of videos every week. All kinds of real estate investing tips, our podcast, our weekly Facebook Live. You can find all of that stuff on there. If you're new to creative finance or Sub2, maybe you're a wholesaler, maybe you're just getting involved in real estate investing, and you would like to try to figure out if creative finance or Sub2 is right for you without spending $100,000 on mentoring or that sort of thing, check out our low-cost coaching, $7coaching.com. I'll answer all your questions, and you can learn a whole lot about subject to in that group, and it won't cost you but $7. And hey, if you're already a Sub2 or creative finance investor and you want to take your investing to the next level, you can join us in our premium coaching program, Sub2 Max. That's where we have 3 times a year masterminds live and in person, and just some pretty intensive one-on-one training. So, guys, today we're going to talk about notes, and it's funny. You know, I've been buying subject to for over 20 years, selling with seller financing, and it's really just in the last several years that I realized I'm in the note business. So we're bringing on a guy today that I met a while back. Somebody introduced me to that is an expert in note investing. Chris Seveney is in Virginia. He's been in the real estate business for over 25 years. And what I found super impressive in his biography, he's managed over $1 billion in real estate. So we got him on here today. Welcome to the Sub2Deals Show.
Oh, thanks again for having me, William. How's your day going so far today?
Man, it is a beautiful day in Florida today. We're down hanging out in Florida and loving it. How about you?
So I haven't actually stepped outside yet today, but I was outside yesterday to get out to my car. And it was 39 degrees, which at this time of year is very unusual. Usually we get up into like the 60s this time of year, and it's actually very nice. But the weather this year has been really cyclical with the hot and cold streaks. We literally went one day from like 35 degrees to 72 degrees in the same morning to evening. But and of course, April showers in this area. So about 2 weeks from now, my allergies will start kicking in pretty good. So,
oh no. Well, I'll tell you, we've been here for about 5 weeks now, and it has just been incredible. Now I know it's going to get hotter here in the next couple of months, but right now it's just it's fabulous. So I don't know about those 30s.
Yeah, you don't have to worry about that down in Florida. I was down there last month for some conferences, and it was nice though.
Yeah. So. Okay, great. Well, listen, man, we've got a lot to cover today. I was making notes before our meeting here, and I realized while I was making notes on notes that there's an awful lot that I'm curious about. I'm sure our listeners are as well. So, well, first, tell us about yourself. I gave you a horrible introduction there. Tell us about Chris and who he is and how he got involved in real estate and notes specifically.
Yeah. So Real estate came through my W-2 job, essentially. I graduated from college in 1997, so you can, pinpoint my age if you can do math. And I started working for a large commercial general contractor, overseeing a lot of residential commercial projects. And it really went by the economy. Early on in the late 90s, it was a lot of office retail mixed use. And of course, in early 2000s, residential, what was exploding at that point in time. And then, of course, the downturn occurred. And in 2008, I moved from the Boston area down to Washington, D.C., where I've been the last since almost 15 years now. But it was interesting because it was right around 2000, decade ago, when I switched from the general contracting side over to work for a developer. And the VP I was working for at the time, jokingly asked me, he's like, what do you got for your own rentals? And I'm like, I don't have anything. I got, you work me too much and stuff. He's like, how do you expect to retire? And he had like 4 or 5 rentals out in San Diego, which of course, California market is a different animal, does, very well from appreciation. And he's like, you got to start getting your own rentals. So my wife and I started with actually building our primary residence that we acted as a general contractor on because of my background in that field. And after that, we had a good amount of equity in the property. So we took that equity and started buying some rentals. We would do, the bigger pockets BRRRR strategy where you buy, rehab, refinance, rent it out. So we were getting all our money back. But at the same time, we had 2 little kids and very competitive area. So my wife is like, okay, we can't do this anymore. So me still having that itch was like, okay, what can I do? And actually, I got really upset because it was in 2016, I realized about note investing. I didn't even know it existed. And I had been in real estate for, almost 20 years. And I didn't know this existed. I knew of like private lending and other things that popped up like Subject2 and all these other areas, IRA investing and having a self-directed IRA and solo 401ks. All this stuff kind of just hit me at once because when you're working in the W-2 world and you're not following what other people are doing and just people in that area that you're in, that W-2 world, none of this exists. Like people don't know this exists. Right. So I found note investing, took some, watched a lot of videos, took a little bit of training on it, did not spend $100,000. Don't recommend. Typically people spend that much. I did actually those, I went back to school at the time and did get a master's in real estate. It was a goal I always wanted to do, whether or not I was investing or not. But that also helped with the note investing space. And, I've been investing now in notes for a little over 5 years. We've bought and sold over 500 assets during that time. So it's been very, very good for us, to say the least.
Yeah, it sounds like it. Well, tell me, Chris, okay, let's just start with some basics here because, it's like we were talking before we got on here. When I got started investing, anything that came along, I wanted to learn it. I was all over the place. And one of the things, and one of the first things you learn is that you can write off trips and do all that sort of stuff. So anytime something came along that was fun, like a cruise, I would go. And there used to be these note cruises. Yep. And I signed up, of course, and went, and I would sit in those classes and they would just talk about partial notes and how to create notes and sell these at a discount and do this and do that. And I didn't get any of it. I mean, I went on, gosh, I don't know how many of those things. I didn't get anything out of it really, except some initial exposure. But so now, like I said, a few years ago, I realized, I'm in the note business. That's basically what I do. But for people that are just getting started out and just want to understand the basics of that, when you say a note, what are you talking about? What is a note?
Yeah. So first I'll tell you what it is not, because that's the one thing that most people kind of confuse is you're not buying the property. And that's where I think people really get confused because you say, oh, I'm buying. No, oh, you're buying the property. No, you're not. So if you are a homeowner, most likely the majority of Americans have to get a mortgage on that property. And there's 2 components to a mortgage. There's the actual mortgage, and then there's the note. All the note is a 3-page document that says, I'm borrowing $500,000 to buy this house, and I'm going to pay you back based on specific terms. How much per month? What's the interest rate over what period of time? So that's the note is an IOU. And the mortgage is the second component to that, which says that's really the teeth behind it, or the ball and chain that says, hey, look, if you fail to perform on this note, we're collateralizing it with this house. So, they are two separate documents. So a lot of people think, oh, I have a mortgage, which is actually, there's a difference between mortgage and note. Most people use those terms interchangeably, but there is specific definitions to them. So that's really what they are. But again, a lot of people can't get past the thought of, you're not buying the house. If I'm just going to use Wells Fargo as an example, you get a loan from Wells Fargo or your local credit union, and you bought that note, you're just taking their place. So all you are is collecting payments on that note. So if the toilet breaks, you're not getting the phone call because, I don't know, if you own a house and your toilet breaks, do you call your mortgage company? No, you call somebody to fix it because you're responsible for all those costs. And that's one of the big differences between being a landlord and what we like to call a lien lord, from that perspective.
For sure. And that's one of the things that it's hard to newer investors when they're trying to even understand what we do with Sub2 is explaining to them there are really three important things with ownership and debt with a residence. You've got a deed that conveys ownership, whose name is on the deed, owns the house. Then when someone got a loan on that house, they typically sign two things. They have a mortgage, they have a note. The note is the promise to pay the money borrowed, but the mortgage ties the note to the property.
Yep.
So
it's
if you don't pay, right, it's how the bank can come back and reclaim that. So knowing those things, understanding what they are, why do you feel like it's important for real estate investors to understand notes and how they work?
It's it's definitely important to understand those, because if you invest in notes, you really want to understand that you're investing in something collateralized. It's secured. It's very different than a lot of other aspects of investing that people may do. When you invest in, I'll just use stocks, for example, do you really understand what that asset is backed off of? And the pricing goes up and down. If you invest in a business, for example, what is securing that investment? The simplest one I think to use is almost like a crypto. And again, I'm not going to comment on whether you should invest in crypto or not, because, I know a lot of people who have made a lot of money in crypto. I know a lot of people who have lost a lot of money in crypto, but I'm just going to use Bitcoin as an example. It's a coin, but is there anything behind it, from that perspective? And, there truly, isn't. Some people also claim the same with the American dollar, which again, you can argue, but the U.S. government does own, more land than probably anybody except for Russia and across the world, and all the reserves and stuff. But, it's not backed by gold anymore. But, it's very important just to understand that mortgage note and a secured interest, because people might invest in second position liens, people might invest in unsecured debt, and it's very important to know your position, because that can have a significant effect on your investment and investment strategy.
Right. And that takes me to another question here that I had for you today. When I know that note buyers place a value on a note. In other words, if you have, let's say that in my business, I sell with seller financing, I create a note when I sell this house with seller financing. My borrower signs a promise to pay. And you guys, if I want to market that note, if I want to sell it because I want cash right now, I don't want to wait over time, you guys as note buyers place a value on that based on certain criteria that you're looking for. Now, what are those top things that you're looking at to place a value? Let's say, for example, let me give you a scenario. I've got $100,000 house that is worth $100,000. If I called 5 appraisers, I would get appraisals from anywhere from 95,000 to 110. It's worth 100, a good solid 100. I've got a borrower in there that gave me $10,000 down, and I financed them at 9% interest. Okay.
Okay.
And
Mhm.
it's over a 40-year note because that's what I
Mhm.
write my notes at today.
Mhm.
There's no balloon. How would you value? What would be the things you would be looking at in that asset to determine
Okay.
the value of it?
So first would be the state that it's in, because the
Mhm.
state plays a significant role. Owning a note in New York versus owning a note in Missouri or Virginia are two completely different animals. Texas, you can, if the borrower defaults, you can foreclose in 60 days. In New York, if you're foreclosing within 5 years, that's considered a big win. So think of your hold time if you risk. So it's much greater risk involved, and everyone should put a value on that risk. Other things that we consider is, again, the value of the property is very important.
Mhm.
Also, the monthly payment slash terms are also important. Most note investors will look to try and get a double digit return. So typically, the best way to do that is shorter loan terms or higher monthly payments. So if loans are spread out over a longer period of time, typically your money, it's a lower payment, so it's going to take longer for you to get your money back,
Mhm.
from that perspective.
Right.
So in that instances, the loans would be discounted based off of the cash, the time value of money, cash flow, to figure out, okay, if I want to get a 10% yield on this, what would that discount look like? And there's a
Mhm.
million calculators. You can use the old TI, whatever calculators as well to do a lot of that stuff. It's not rocket science. But those are some of the major components. What we see a lot of times, and I'll just mention this, is with people writing new seller finance notes, is they're taking $100,000 property but
Mhm.
writing a note for like 130.
Oh, wow.
And when those instances occur, basically they're thinking, okay, I'll discount this 10 or 15%. So I'll get, I'll sell the note for, call it 110,000. As an
Mhm.
investor, like, well, no, we're going to probably only pay you based on the 100. We might pay you 80,000 because
Right.
if it does default, we have legal fees and everything else that we want to recapture. So we got to protect our interests. We don't want to be in a deal for 100,000 that we sell for 100,000.
Right. Absolutely. That's a little bit shocking. I know typically we'll mark a house up somewhere between 8 and 10%.
Mhm.
And we generally allow for about 3 years before our buyers to refinance. We figure most of them, we encourage them to
Mhm.
refinance. We don't force them to. And
Yep.
since we don't put balloons in there, we can't make them.
Yep.
But we do things to encourage them to refinance.
Well, the 9% typically is a good encouragement,
Mhm.
for the higher
Right.
interest rate. Now, again, rates have gone up recently, but still, and there's firms out there too that I'll just mention, like one called FNAC, First National, I think, Association Credit, or they're out of the central Midwest area. That if you've got a borrower with like a credit score over 600 or 650, and you've got like 2-3 years of payment history, they'll buy that note from you and pretty much give you par for it.
Right.
So, mhm,
That takes me to another
mhm,
question that I had for you. When you're evaluating a node, how
mhm.
do you guys now we're not in a normal market
No.
right now. I mean, I see I talked to somebody recently who was telling me that they have hedge funds that'll pay 105% of market value for a house. How does that impact a note investor when you've got a house that, let's just say, in a market like Colorado Springs where we lived until this past year, where they've had 4 straight years of 27% appreciation. Houses have literally doubled in price
Mhm.
in less than 4 years. So you take a house like the one we lived in when we were there that was worth 300. Now this house is probably worth 450 or $500,000. If I had a note to sell on that house, how would you take what's going on in the market into consideration in valuing that note?
Yeah, there's a lot of things to take into consideration. Uh, One thing that I see a lot of sellers pushing is on properties like that. And let's say they only owe 200,000 on the house, but they've lost their job for COVID or, unforeseen circumstances, and they've defaulted. A lot of sellers will try and push you to say, well, you'll get the house. And the reality is, no, you won't. if it's any, if it was you, you can't find any houses on the market. Your credit's already shot, and rent would probably cost you more than your mortgage. So what's your option? Most likely the borrower's going to file bankruptcy. So we've seen a lot more bankruptcies, but note pricing has increased significantly because of the values of properties. They have increased, which is also very risky, because if there's any signal of any potential downturn, and you're pricing it based off of, again, that the value versus what the balance is on the loan, a significant drop can add significant risk. And where we see that the most is typically in Midwestern communities that are a little more rural, where and they're a little more distressed, where home prices might have been, 50 to 75,000, that all of a sudden they bump up to like 125,000. And, for those listening, depending on when you are, I've been in Boston and Northern Virginia, so you can't get a parking space for 100,000. So I was kind of perplexed when you could find houses for that cheap. But when you do, just got to understand kind of some of that inflationary numbers to make sure you always protect yourself and leave some wiggle room to mitigate some of that risk.
Right. So, I mean, it seems to me, I know as an investor, when I look at things, when you see market values just going nuts, and you're like, let's just take in 2007, 2008, when a $300,000 house, let's just say in Las Vegas, overnight was worth 140 almost. If you had bought a note there, let's say that you had discounted it's a note on a $300,000 house, $300,000 note, you discounted it down to $250 and purchased it, and then all of a sudden the house is worth $150. I mean, you got to hope that person stays and pays. You know what I mean?
And most likely what they're doing is they're like, you know what? Thank you very much. Here are the keys, because this is never going to be worth 300,000 again.
Right.
And now what do? You're stuck with $140,000 home. You're stuck with $100,000 loss. Now, do you keep it? And again, one of the benefits of note investing, though, is, now you still have the property. Do you sell it? Do you turn it into a rental? You do have a lot of exit strategies, which is one of the benefits of note investing, that you can try and recoup some of that money.
Right. I got you. Okay. But you have to take ownership of the house then.
Yeah.
To do that.
You're
so now you are the homeowner.
Yeah. And you can't turn around and write another note for $250, because nobody's going to give you that, because, the sky was falling at that time, and nobody in their right mind would pay $100,000 over asking or over value like they are today.
I know it's crazy. We have some friends that just bought a house in Florida, and they were telling Jody when they were talking to her about it the other night, that their realtor told them that lenders in Florida are now waiving appraisals. It's just so crazy. They just don't even waste time with it.
This personally, I don't think this is going to end well. I don't think it's going to be like 15 years ago.
Yeah.
But I mean, they just came out today. Inflation rates 8.5% over from last month. People's increases typically get 2 to 3% increases. People are going to start feeling a lot of pain from their, that live paycheck to paycheck, and and then commercials, a whole nother animal that we could have a whole 5 more episodes on. But
yeah, for sure. Yeah, I know exactly what you're talking about, and it's really funny. It's like, that's always my question when I see you see these things progressing, no appraisals, waiving this, waiving that, all these loan products that are very similar to the ones we had in 2006 and everything that created this problem that we had then. And it's like, were any of you people alive then? It's like, I saw a well-known guru sent out an email the other day that actually said in there, we all know real estate will continue to just go up and up in value. This isn't going to stop. And I'm like, let's think about it, guys, for a minute. It's what I said to my students the other day. I said, let's think about this for a minute. Do you realize if this maintains, what the median priced home will be in this country in just a couple of years, right?
Yeah. So, and you've got a lot of, again, Wall Street money, but I think a lot of it is the whole FOMO, fear of missing out, where people have seen it. And also, a lot of people got into real estate, 5, 6, 7, 8 years ago,
Mhm.
and they haven't had to live through a downturn.
Right.
And I think a lot of people, and I saw it back in 2007 in the company I was working for, they saw it, especially down in Miami, when kids out of college were literally going to lending institutions, getting loans with no money to go build a condo building, and they had no experience. And I was working for a general contractor time, and they were kind of like, "Hey, look, we're slowing down and we're cutting because this is clearly not going to end well." And I think what we're seeing today a little bit is a lot of people getting into real estate. They may not have a lot of great systems and management experience in how to run a business, but let's be honest, a lot of people could have made money the last few years in real estate. Once it starts getting a little tougher, then we'll see who kind of, survival of the fittest.
Isn't that the truth? What's that Warren Buffett says about when the tide goes out, he's been swimming without a bathing suit
Yep.
or something like that for sure. Yeah.
And it's unfortunate. There's going to be
Yeah.
a lot of people who are going to, going to get caught in it.
I'll tell you what I see a lot of. I don't know how this, if you see this in the note business at all, or if you guys pay attention to this stuff. Some of these deals, and I call them deals, I use that term very loosely, that I see people talking about, especially on Facebook. You can go into these groups and see all kind of stuff. But a big thing that some trainers teach students to do is to go out, pay for, especially taking over payments on sub-twos, take over payments on a house that would never cash flow as a rental, because you can just turn it into an Airbnb. Okay. All right. So that's a really big thing now. So you're overpaying. It doesn't matter if the seller has equity, write them a note for their equity. You've got this outrageous house payment that's thousands away from cash flowing, but we're going to turn it into an Airbnb and make $10,000 a month with it. That is a really big thing right now. And what do you think about that?
I've stayed out of kind of the short-term rental game. Several reasons. One has been that would be something I wouldn't be interested. I would not do personally. My opinion on the short-term rental game is people have been pent up for the last 2 or 3 years in their house.
Mm-hmm.
People want to go on vacation. People need to go on vacation. They need to de-stress. So that market right now is doing phenomenal.
Mm-hmm.
But some of these places that I see everyone flocking to, is that really going to be a hit place to go in 2, 3 years from now? Or is it going to turn back into more of a ghost town area once everything subsides and people get back to their normal living, on top of the fact that, again, everything right now is so expensive and most people live paycheck to paycheck? Are they even going to be able to afford to go to those places? We see something similar in notes, in the fact that you see, the main thing you see with a lot of the people in this space is people overselling or overpromising how easy it is to work out a distressed borrower. It's like, okay, you can buy this note in a month's time. You'll get them on a repayment plan. They'll start paying, and then you can turn around and sell the note. Well, first off, I would say on average, it's probably takes 6 months. If you get somebody before 6 months, on some type of plan, that's a positive. Now, what typically happens is the way the note business works when you buy a note is typically it's been at a servicer, and you typically may move it to a different servicer, which that whole process takes about a month. And then once that process happens, the new servicer will send out a letter saying, hey, and most people, if you have a mortgage and you had to switch where your payments go, you get a letter of, okay, now here's where you send your payments. If you disagree with the amount, you have 30 days to contest. So there's another, you're already at 2 months. And, your servicer, if they're delinquent, may be reaching out this time, but it's not until really the 3rd or 4th month that if they're more than 120 days delayed, that you can send a notice of demand, which says, hey, we're demanding you, make up these past payments, or we may seek to, remedy it through the course of the mortgage, through foreclosure, or whatever action we can take. So, that whole process right then there, I just spinned off, is already like 3-4 months. And until typically they get a letter from an attorney is when they start to act, because a lot of these borrowers have been distress. We're not talking like a month or two. We're talking usually 6 months, years at a time. They don't even open their mail, most of them. So until it says law offices of, XYZ, then it's like, oh, maybe I should open this. And that's usually when you can sometimes get them back to the table, or actually physically send somebody to the house, knock on the door, and, hand them a letter that says, can you please contact us about your mortgage payment.
Right.
But that's kind of, one of the big selling things we see people now is it's just like, I'm sure in your training, oh, you can make tons and tons, not yours personally, but in your business, you can make tons and tons of money, $100,000 or $200,000 in your first year with only like 25,000. And I sit there, I'm like, wow, I can 10x my money in a year, show me the way, come on, just show me the way. So.
Yeah. Okay. Great information, Chris. I really appreciate that. Listen, we're going to take a quick break and we're going to tell you about the best dang Sub2 course on the planet. And then we're going to come back and we're going to ask Chris how you can get started investing in notes. What's the best way to do that for a new investor if you're interested? So you guys stay put. We'll be right back.
Have you ever had a seller give you a house? It's a pretty awesome experience. If a seller wanted to give you a house today, would you know what needed to be done to make the deal happen? Would you like to learn how? The Ultimate Sub2 Guidebook will show you exactly what you need to get those deeds and sell those houses with seller financing. Join the thousands of other investors across the country who learned how to get the deed with the Ultimate Sub2 Guidebook. Get the Ultimate Sub2 Guidebook today at sub2deals.com.
Hey guys, we are here today with Chris Seveney. He's talking to us about notes, all about notes, how to get started investing with them. And so when we left, we were talking about the Airbnb thing and people overpaying and the process for getting a house back, because a lot of people make it sound like it's really simple to do. So now I want to ask you, so if someone's listening and they say, okay, you can get involved investing in notes. What do you recommend as the best way for a new investor? Let's just say maybe I'm a landlord, I'm a buy and hold, I rent them out, but notes sound interesting to me. What would be the first steps to take if I wanted to start investing in notes? What should I do?
The area I would recommend people get the most, again, it's all about education and learning about the business. Coming from the real estate side over to note side, the area I see people somewhat struggle with the most is understanding title reports in that whole chain of custody between, with a note as it gets sold, there's things called allonges, which is literally, if you think of a blank check with pay to the order of. And that's really what an allonge is signing or that note back over to the next person. So it's almost like, I sign it to William will sign it to Jody. It's that trail of who actually holds that debt. And then of course with the mortgage, those are assignments that get recorded with the county. So the county knows if, who is, who's got some encumbrance on that property. That's one of the main areas, but it really boils down to education and getting very familiar with the process. I typically, what I recommend to people is you get comfortable, find a mentor and, not somebody you have to pay tens of thousands of dollars to, and then go out and buy a low dollar performing loan. That's one of the benefits of notes compared to other aspects of real estate. You can buy a performing note for $5,000 or $10,000. It's just got less payments left till the end. It's got a lot of equity, so it's secure. The reason I recommend that is to understand who the players are in the process. I like to use the analogy for people who golf. You can watch golf on TV, you can watch all the training videos in the world on golf, but until you grab that driver, step up to the tee box and swing and try and hit that ball, it's a completely different feeling and different animal. That's what note investing is like. So.
Okay. Now I know you have a podcast, Chris. You actually had me on it not too long ago. We've got the URL up there for that. Do you actually teach note classes or have any coaching or anything on that?
So we do have a membership group. And so, it's a membership. We meet weekly on that, and it's basically, twice a month we'll go through, different types of trainings and seminars. And the other 2 weeks, it's almost like an Ask Me Anything, where people might be in certain situations if they own notes or looking at things, to kind of guide them. And we like to keep it small. Right now, we have between like 15 and 20 people. My goal was not to grow this to 100 or 200 people. I like it small and intimate, where I can really get to know the investors. Recently, we started in January, so we're 4 months in, and I've had 3 investors already go out and buy their first note. I like to tell them, hey, I'm the little devil on their shoulder, basically, kind of pushing them along the way and so forth. But that's a lot of times what people need, is that little push, because you've never done it before. So you're very timid and, of course, risk averse. But if you can have somebody who has some experience look at it and say, okay, you're not, you didn't miss anything on this deal, or this price is within line with market, what the market is, providing, it gives that people that sense. Now, you can never predict what the outcome is going to be, but at least going in, you can have somebody look at it and say, okay, yes, this is something that I would consider as part of my portfolio, and give them some of that assurances.
Okay. So I've got your email here, Chris. Can I share that with everyone?
Oh,
They can get
absolutely.
in touch with you
Yep.
if they're interested in your membership or learning more about what you guys do there.
Yep.
Okay. So it's Chris at 7E investments.com. Okay.
So,
So
just
you guys,
shorten my name from 70 to the 7 and the E. That's what I tell
okay,
people.
70. I got you. Okay, great. Yeah, and you guys check out his podcast, the Good Deeds Note Investing podcast. So,
The podcast is really us, when we started out, telling our story about the note space, and really bringing it down to reality, because we've over 200 episodes now, and 4 years ago we started it. So I'm kind of actually proud of that. But we started, there were so many gurus out there promising everything and anything to get people to join, because at that time it was more difficult to find assets.
Right.
So, as I'm sure in your businesses, people ramp up their training, when they're not buying, and that's what was happening. So we really wanted to share with people kind of what can go right, what can go wrong, and kind of the struggles that we have, because
Right.
it's not Facebook where you can just put on this pretty utopian world. There's a reality to your business where you do struggle.
Yeah, and this is what I find, because we share the bad as well. The bad stuff's not popular, out there. It doesn't sell as well. But if you really want to learn, I mean, you need to be informed. If you want to do this stuff, you need to know it's not all sunshine and rainbows and like you see on Facebook. That's what we call it, Facebook. There's some work involved. There's some risk involved to doing this sort of thing. But the rewards are also, I mean, it's a lot better than a W-2. I mean, my worst day in investing is 10,000 times better than my best day ever was at work. It's a fact. So let me ask you this. So you said that to get started, they need to go out, buy a low cost note, and I know you can buy notes very inexpensively. They're out there. What's the best way to find those, in your opinion?
When you're getting started, this is one of the mistakes I think people make, is they try and reach out to everybody and anybody. And if you only have, let's say, most people probably start with 10, 20, 30,000, say up to 50, you don't need to be talking to this large fund that's going to send you 5,000 assets, because they want somebody who's going to buy a lot of assets from them. Yeah, well, they sell you one-off and stuff. I typically tell there's a few websites out there that you can buy from. One of them is called Paper Stack, Notes Direct, and on I give out, people reach out to me, I can give you a list of 25 places you can go buy notes. But the best place typically is join some of these fake book groups, which are actually the groups on Facebook, I got to say, are awesome. Take away your personal profile from that for a second, but the groups are phenomenal, because you can find people asking questions. You can learn a lot, but also you'll find people who might have an asset that fits your criteria that doesn't fit them. Just because somebody's selling a note doesn't mean it's a junky note. It might be they don't invest in that state. They don't like that area. It doesn't fit their criteria. Or they may have bought 10 and that was thrown in. And they're like, hey, I really don't like these kind. and they'll turn around and sell those. So that's something that's important. But I tell people, just start reaching out. Don't spend too much time or effort trying to reach 1,000 people when you're getting started. It's good to network, but the people who are closest to you in these communities are typically where most people buy their first asset.
Right. So, Chris, do you have a group on Facebook, or if
Yep, we do.
Okay.
It's called the Notes and Bolts. So instead of nuts, it's notes and bolts from the Good Deeds Don't Investing podcast. We've got about 1,800 people in there, and we share a lot of stories, a lot of information in there. Most of the stuff, honestly, that we provide is free. My membership group does have a cost to it, which you get one-on-one interaction with me.
Right.
But all the other stuff, a lot of reports and stuff that we've provided, we like to provide that to people. Learn from the lessons or mistakes that we've made, so they don't have to repeat them.
Okay. So that's Notes and Bolts Facebook group. So we'll have that in the show notes here. So you guys get over there if you're interested in notes and join that Facebook group. So you keep bringing up this if you've got 10, 20, 30, 40,000 to invest getting started. I'm going to ask you about something because, we're in the creative finance. We like no money down.
Yep.
Okay. We like to walk away with money.
Yep.
Okay. And that's you're talking about the return most note investors typically like to see. So one of the things that I did take away from these cruises that I went on was that you can invest in notes with none of your own money. How does that work?
You can.
Right.
I don't recommend it for somebody just getting started.
Right.
And the reason why is you should have some experience, or at least let the person know your level of experience before taking somebody else's money. But there are ways, for example, that like you mentioned partials, I think previously, and that is an awesome way because it's a win-win situation for both sides. And I'll quickly explain a partial because it's going to blow people's head when we start talking about it. But let's just say there's a $500 a month payment and there's 100 months left on that loan. Okay, so we'll call it $50,000 of payments. You could sell 50 of those payments to an investor, which would basically give him, $25,000. Now he'd need to make a return. So let's say he gave you 20 grand for that, but you may have actually bought that note for $20,000. So you could sell the half those payments that would go to the investor.
Right.
And then you get either the back end, or instead of giving him 500, you give him 400 for say 75 or 80 months, or even 100 months. And then you're getting $100 a month.
Right.
So it's basically you're arbitraging the note. Some people call it hypothecating, but essentially what you're doing is you're taking it and you're splitting it. And two. Now what the terms are is where you can get very creative. Like I said, you could give them 400, you could keep 100, you could give them 300, you keep 200, and then the terms are based off of, whatever your amortization schedule kind of plots out for you. But that is the safest way in my mind to do it with no money down, when you can take a loan that's been performing for a significant period of time, buy it at a discount. Maybe you're buying it at 10%, but you have an investor who only needs to make 7%. So right then and there, there's going to be that spread. So that is one way, again, to get into this. And just so people know, it's not hard. I have over 75 of these right now in my portfolio.
Right.
And you can structure them, each one is different. So you can structure them to project your cash flows in future years.
Right.
So it's pretty powerful.
Right. I know. So really it's then at that point, if you network with people, you've got investors, you meet people that have cash to invest, what kind of return they want. Then you can go out and look for these notes that you can structure. You can buy at a certain price, structure it to give them their return, and you can get in with no cash. You have to find that motivated seller, I guess, just like in real estate business.
Yep.
That wants. It's like those commercials. HG Wentworth 877 cash now.
Yeah.
So, and because that's what they do, isn't it? They buy structured settlements, notes, and that sort of thing.
So typically the area you find people most interested in investing is people who have money in a self-directed IRA. And the reason why is notes is kind of a sexy form of real estate.
Mhm.
You know, we always joke, if you drive to any major city, who owns the tallest building? Typically, it's a bank, you know, and
Mhm.
you are the bank.
Right.
It's also a form of real estate that people like. The other reason why is with IRAs is note investing is the interest is considered ordinary income.
Mhm.
So if there's no depreciation, there's no tax benefits. It's actually probably, negative tax consequences with a note.
Mhm.
So if you had, cash in, you know, post-tax cash and pre-tax cash, most people take that IRA money to invest in notes in their hard-earned cash in real estate because they get those tax benefits. So
Mhm.
that's another reason. And we see a lot of people in that IRA space who go from doing private lending and then they get burned on a private lending deal, say, look, I don't want to deal with this anymore. Can you just give me, 7.5%, return and pay me principal and interest for the next 4 years on a partial? I'll go through my portfolio, but yep, here you go. Here's one, and boom, done.
Right. So as far as finding note sellers or
Mhm.
notes that aren't necessarily on the market, I was going through some stuff on my computer the other day and found a course I had bought years ago that
Mhm.
actually had letters and postcards in there that you
Yeah.
go do research at the courthouse, find people
Mhm.
that had second mortgages or
Mhm.
seller held first
Mhm.
and do mail outs to them about selling
Mhm.
their notes. Is that a viable thing today to do?
It is. I know several people that do that.
Mhm.
And if you do it on a consistent basis, I'm
Right.
sure it's just like how you find your sub-2 deals.
Right.
It can be very lucrative.
Mhm.
Now, what most people find, and I'm sure you see this in your business too, is they send out one batch of letters, they get one phone call, they disgruntled and stop doing it.
It doesn't
Uh,
work.
yeah, it doesn't work.
Right.
Again, it goes back to that consistency. Now, that's not something that we do. We typically will build the relationships with the hedge funds because we're looking to buy, 10, 20, 30 assets at a time. But as you're getting started, I know people who do send out a lot of, the yellow letters or letters. And I have one investor who actually now does that and he finds deals. He feeds them to me if he's not going to buy them because certain ones don't fit his criteria, and I pay him a fee for them.
Right.
So, basically I'm paying for his marketing essentially.
Mhm.
So it's a win-win for both.
Okay. Awesome. All right, man. Some great information about notes today. Listen, I'm a new investor. I'm listening to this podcast, watching it, and
Mhm.
you really sparked an interest. What are my next steps to do
Mhm.
to get involved in note investing?
So I'd say the three places that you can definitely learn a lot about notes is one is the website Bigger Pockets. They have their own notes group there, which has a lot of information. I'd say second is our podcast. Again, get a lot of free information there. And then third is, YouTube has tons of information.
Mhm.
And, that's all of that stuff is primarily free.
Mhm.
Now, I would recommend if you do want to continue and start learning more or learn quicker, joining a membership group is something that you might want to consider, depending on your structure. A lot of this information can be found online, but in membership groups, you'll typically find it much more structured. So it allows you to fast track things.
Right. Okay. So, guys, make sure you listen to Chris's podcast, the Good Deeds Note Investing podcast. Contact Chris at 7einvestments.com about his membership program, and visit his Facebook group, Notes and Bolts
Mhm.
group. And like I said, we'll have a link to that
Mhm.
down here in the show notes. So,
And feel free to reach out. I send people typically a Calendly link where if people want to set up a quick 15, 30-minute call just to talk about notes, how I can help them. I've been involved in every aspect of real estate except sub-2, actually, which is something I'm interested in learning more. But, I enjoy talking real estate with people. So
mhm.
that's something, anybody feel free to reach out.
Yeah. Well, Chris, thanks so much for being here today. We really appreciate you taking time to teach us about notes.
Oh, and thank you for having me, William.
All right, great. Okay, guys, that is it for this episode of the Sub2Deals Show. Today we're talking about notes. Very educational. Thanks, Chris, for being here. Guys, again, if you haven't yet, subscribe to our YouTube channel. We deliver a bunch of content there each and every week for you. And if you're interested and you're on a budget, Learn all about creative finance and Sub2 at $7coaching.com. So we'll see you again next time. So until then, get out there, talk to some sellers, and buy some houses.